Hi everyone and welcome to today's morning report with me, Richard Perry, market analyst at Handtech Markets on Monday the 18th of August. The European markets have started very strongly today, and that's pretty much come as there has been a little bit of progress over the weekend with regards to Russia and Ukraine. Russian Foreign Minister Sergei Lavrov saying that the convoy of humanitarian aid is there's been some progress made in terms of getting them over the border and into Ukraine, but on the other hand, there hasn't been a massive amount of progress made in terms of the ceasefire that the Russians are pushing for as well. So a little bit of conflicting reports there, but certainly the fear that spread through the markets and significantly through to the DAX on Friday afternoon after the Russian military convoy was attacked by the Ukrainians. That seems to have been allayed somewhat, and the DAX is strongly higher, 1.5% higher now on the day. Also, the CAC as well, significantly higher. So that volatility in those markets continues to develop and remains very high. Tensions and reactions are still very elevated in terms of this Russian story, so that remains to be the case. In terms of currencies today, there's fairly mixed. Actually, not a huge amount of movement. A little bit of weakness in the euro, but probably the big move is coming in sterling after comments over the weekend by Mark Carney, the Bank of England governor, basically saying that interest rates could start to rise even before they saw any real wages growth in the UK. So that was has given the bulls a bit of support today, and they're pushing higher. In terms of where we're looking at. Sorry, excuse me. Just find my chart on the DAX. On the dollar index, we're still just above that 81.3 mark, but that is acting as a level of support. But it's just in a bit of consolidation mode, and that's reflected in, I think, certainly a lot of those currency pairs, with the euro still consolidating sideways. Certainly the big main one that is trading pretty much flat against the dollar at the moment. So it's interesting to see how this one pans out. But in terms of volatility, it started to push higher again, having corrected significantly throughout the week. It started pushing higher on Friday as that news came out of the attack on the Russian military convoy, but you can imagine that will start to turn lower again as this stock market rally continues. In terms of our data out today, we've got not a great deal to really push markets around. The Eurozone trade balance at 10 o'clock is not going to be too significant for the euro, although any sort of surprise around that 15 billion euro expectation could have an impact. But more importantly, I think this afternoon you're looking at the US housing market index at 3 o'clock. 53 expected there on the data, and that is in line with last month, and that could certainly have an impact, because that starts off all the key housing data throughout the week that we've got this week from the States. Anyway, my chart of the day is the FTSE, and FTSE has rebounded strongly in the past few days, as you can see here, and it continues to move higher. You had this pattern on Friday, which could arguably be called a shooting star, but to be honest, it was still I think you'd need to have a close below Friday's low. Certainly a down day today, and it doesn't look like we're getting a down day, so that it looks like this pattern is being negated at the moment. But this rebound in the FTSE is certainly taking these momentum indicators higher. On the intraday chart, you'll see it a lot better actually. You've got this head and shoulders reversal actually on this intraday chart, this on the hourly chart, and that gives us an implied target of 67.70 on the breakout target, and it looks like, as you said, that the support is also coming in. Had a bit of resistance on that 21-day, but now that 21-day moving average, the green one, is becoming the basis of support. Currently around 6,699, and that is just around 35 pips down on where we are at the moment. But certainly that looks like support's coming in today. And if you can break above Friday's high at 67.43, that would suggest you're probably back on the track towards that 67.70 mark, and ultimately back on the daily chart, it would look like you'd be probably coming up to retest that key August high of 68.33 ultimately. But it certainly looks like the bulls are rebounding today and back in control near term anyway on this FTSE chart. So in terms of what we're looking at today, as I said, the housing market index for the States can have an impact on this afternoon's trading, but other than that, I don't see a great deal to hurt these markets unless you get some sort of announcement out around the Russian-Ukrainian geopolitical events. So I wish you good luck in your trading today, and I will speak to you later. Thank you.